Alright guys, just gonna go ahead and run through the harmonic bat pattern. So this is one of the most common harmonic patterns, and before we really run into it, I just kind of wanted to show you like what is harmonic trading to start with. And for harmonic trading to start with, this is a very important chapter in just chapter 1 of Scott Carney's harmonic trading book. But basically it's harmonic trading is a methodology that uses the recognition of specific structures that possess distinct and consecutive Fibonacci ratios, and it aligns and quantifies valid harmonics. So basically what that means is you'll have Fibonacci structures with using your Fibonacci retracement tool that happen over and over again in the market. And if you can identify these structures, you can find those high probable reversal points in the markets. So if you dig into Fibonacci, you know that it's found all in life. Basically what Scott did is talk about how these patterns are like mini cycle life patterns and they continually repeat. So if you identify them, you can find them in the markets and you can take trades on them with a higher probability of success. So if you need to, you can read all of this in his chapter 1 book. It's basically talking about how you can go into order within chaos to kind of strategize your trading plan and have specific structures that play over and over again. So there's multiple ways when you take your trade and stages. So you have your trade identification. That's going to be what we're going to be looking at now. Right after this is how to identify your harmonic structures when it comes up. And then you also have your trade execution, how you're going to take your trade with your harmonic structure, and then a trade management on basically once your harmonic structure has printed, you've found your entry, you entered, you looked with your divergences and everything, then you go into your trade management to manage your trade, know when to get in and out of your trade entry. So let's go ahead and start looking at the bat pattern. So just to get started, your bat pattern is going to look like this. You're going to have a bullish one and a bearish one. So for each harmonic structure, let me pull up the entire list really quick. Give me 2 seconds. So this is going to be all of your harmonic structures. You're going to have 7 structures pretty much, give or take, if you add the deep crab in here. But we're focusing on the bat right now, and each structure has a bullish one and it has a bearish one. So it's the same exact ratios, just flipped upside down. And the bullish one is the M-shaped, bearish is always W-shaped. So I'm going to start off with a bullish structure that has played out to TP2 and take profit 2, and I can go over where your take profits typically should be with these and just go ahead and give you a good example. So we'll start off with STG here. If you can see, just by eyeballing the chart, I know I've done it for a while now, so I can kind of just see the images, but you actually see right here, you have like an M-like structure. You can see up, and then back down, right? So that's sometimes where you can just start to eyeball things when you see these ratios. And what you always want to do is when you're finding your structure, the most important part you do, first use the magnet, and then when you're finding your legs, you have to find that B point first. So when you go up and then down, and it has to be a swing low, this is the lowest point right here. Then you go to swing high. Swing high is the highest point here. Then in between this B and C leg, you have to go to the lowest point. So you have to come all the way down here to your B leg, which is your lowest point. And then you go up to your C leg up here. And then from there, you get your last ratio. So you would drag this all the way down. So let me just copy and paste this over here for you. So when you're looking at your harmonic structures, the most important things you're going to be looking at is to make sure all of these fit inside the ratios. And I made a little Excel cheat sheet for you. Let me see if I can make this bigger. But what you're going to want to see is these ratios fit. So just save the cheat sheet, but I'll show you how to check them. You just have your cheat sheet open. You can put it on your desktop background. You can print it out. You can put it on your wall. anything that's going to help you when you're learning these patterns. And one of the most important things to do is once you have your pattern, you want to look for the ratios here. So let's bring this forward. Let's make it a little bigger just so it's easier. So as you can see here, this XAB leg, this is your first important one. So you want to go XAB, and then you have to see here if it's in between your 382 or your 0.5. So this one's a little bit more, right? But plus or minus 3%. So you're good with the pattern. So for example, if this was moved up just slightly, let's see if I can grab it real quick. So right here is your 0.5. So you have a perfect 0.5 here, pretty much. So that shows that, okay, this can be a valid structure here, right? You go back to your cheat sheet and you look and you're like, okay, 0.5 to 382, what can it be? So it can either be a bat, an alternate bat, a crab, if it's a 382 or 618. So since it's closer to a 0.5, it can't be a crab. And then you look, it can't be a cipher because it has to be a 382 or 618. Can't be a butterfly. Could possibly be a shark, but the only way it would be able to be a shark is if this leg up here extended past your A. So that's one thing, that's the next step I'll get into. When you're identifying this bat structure, you have to have an M shape, and this C leg here cannot go past this A leg. As soon as it goes past that A leg, you start looking for a shark instead. So once you have this identified, as soon as you have your XAB leg identified and you have a 0.5, you know the rest of your ratios. You know what you're looking for after that. So once you have that XAB, then you look for your C leg. This is going to be your next one that you're going to choose where to go. And this one has a larger variance. It can be between a 382, which is right here, right around there, your 382, all the way up to your 886. So it can go within this range. It doesn't have to be exactly this range right here. So this can be a 382 all the way up. It could have extended up to your 886 up here, as long as it doesn't pass this A leg, and still been a valid structure. So that's why sometimes when you're taking these harmonics, you don't want to take the trade without this C leg being complete. And you can identify it, be like, okay, potentially could be a bat if you have a 0.5 here and we come back up. But typically you don't want to take the trade unless you have a completed harmonic down here at your 886 area. Or if you have your bat structure like this, you have your C leg taken, it started to come back down. So for example, say it just went here, but you didn't see any of this data. Once it crosses that B, that's when you really start to look for it. So you have your XAB already, you have your C, so this is your 0.5, this is between your 382 and 886 Fibonacci ratios. And then once you cross that B point down here, then that kind of activates the pattern to start looking for your D point down here. So this is like your trade management, or where you're looking for a trade and identifying the trade, is once you have these points here, that's when you start to look for your D point. So what you do is you would mark off, for example, that 886, and that's when you're going to start looking for your reversal point in that area to take a bid on this trade. And you want to line that up with divergences too. So a good example for this one is when you're lining this one up, you have your correct ratios. Say this formed, you look at your divergences and you have a hidden bullish divergence here, a massive one on the daily. So you got to also use your cheat sheets for the divergences. They're posted there, but you have a low here, but then you have a higher low over here, but you have a lower low on your momentum on your MACD over here. So that's one way where you can start to identify these trade patterns. You have the same thing on the RSI here. You have a high here, you have a way just massive divergences forming down, and you have a lower high here but a higher high in price. So here what you would do is you would look for your potential reversal zone right around your D point and your 1618 to 2618 ratio here. and you would start to look for a reversal from here. So you want to use your divergences. You don't have to enter right at the 886. You can, but you can always enter 25% and then start to enter farther if we get a couple wicks down here. This just shows where price should start to reverse. And if you scroll a little bit right, you can actually see at the beginning here it wicked through it, but then it came back up and it came right back down into it and then hit it again, and you can see the bodies of these candles here actually reversing from the exact 886 here. And then from there, when you're looking to take profits, you want to take your entire pattern from your A to your D down here and take your Fibonacci tool. Make sure you have these Fib ratios entered as well. And then once you have that with your Fibonacci tool, you're going to look for your 382 and your 0.5 to be your take profits. So your 382 was right here. You had your 382. You don't have to be a robot. If it doesn't hit exactly your 382, you can always take some profits soon, or if you realize that price is starting to drop and it's shy of it, go ahead and take profits. Usually this first initial test right here too, you do get, it's called a type 1. So I'll pull that up just to show you an example. So I know this might be going into a lot, but you can watch it a couple times if you need to understand it. But I want to show you guys the right way how to do it. So your type 1 reaction is when it first hits that D point. That's when you're looking for that reversal of your trade. Usually you could get more of a shallow run up. Sometimes it'll just completely reverse from there and just the market will reverse. I'll show you a couple examples of those. But you want to get in your trade here, but also know that this is your type 1. So it could come all the way back down to that D point and find support there again, and then that's when you get your actual move up for your type 2 reversal. So one trick I like to do is once you have that D point and you enter here, you just want to draw a trend line. If you start to break that trend line, you can always get out of that trade and look to get back in down here at your D point. So you could have entered down here. You'd be looking for your trade. Stop loss is always, you want to have it below your X down here. So your stop loss would have been down here. And then what you do is you watch the trade go up. You lose the trend line, you can take your profit here, look for re-entry at your D point, and then you're targeting your 382 and your 0.5 again from here. And you can actually see if you fib from high to low here, you got an exact 0.5 touch and your trade would have been completed on this. Let me go to a really clean harmonic that recently just played, just to show you an example here. So this one's going to be on Align Technologies Invisalign. It's on a weekly. So this one it looks a little bit more tricky because you don't have any clear defined points here. But if you go from high to low for your X to A, and then you look for your B point, you got an exact 0.5 here, right? So the next thing you're looking for is your next leg up. You have a 382. So this is actually perfectly in range for your harmonic structure. And then you come down to your 886. And you can actually see where price starts to reverse at this level at your 886 here. And one thing I will say is this leg is important to have, but it's also the least important leg. So harmonics will play out at your 886 without this leg being exact. Usually you want to have this one between a 1618 and a 2618, but I just wanted to show you guys an example of how it can still play out with this leg not being inside the range that you need. But if you do have it inside the range, typically it's a stronger pattern. Another good one that I can show you, let's go to the AVAX one here that played out a while ago and go to the daily chart on this one. So this one was a bearish harmonic, so just show you an example of a bearish one here. So for your bat structure, your first leg, make sure you're using your XABCD pattern tool. And you're going to want to turn on your magnet. And you go from high to low, and then you look for your B point. Okay, where's a B point? That's in between 382 and a 0.5, right? So then you go down for your C. It has to be on the lowest point over here. and then you look for your D point. You already know with your bat structure that your D point has to be an 886. So this happened back in August of 2022 with AVAX, and you had a perfect harmonic at your 886 that played out for the exact top of this. And what you do is just back checking it again. Keep your cheat sheet between 382 and a 0.5. All right, this leg between a 382 and an 886. This one in between a 1.618 and a 2618, and this one up here, perfect, 886. So you have your 886. So you see that this is a valid harmonic. You'd try to enter your trade as close as you can to this D point, or if you start to see a reversal here. And then, so you're monitoring the trade, right? You've spotted the pattern from right here. Once it crosses this B point, you start to spot that pattern. You're looking for that pattern. And then once you start to get closer to your D, this is when you start to look for your shorts on this trade. Then you also check your divergences. You can actually see when you finish at your D point over here that you did have some bearish divergence start coming down, or convergence, that price, let me show you on price too. Price also hit a divergence up here. So you have price hitting a divergences, you have slowing momentum and price in your MACD. It's starting to slowly go down, like a trigger wave down. And then your RSI, you also have divergences as well, starting to build up this entire ride up. And then you could also, on RSI, just to, if you want an extra trigger for your trade, you can take from this low here and just draw your trend line across this whole entire thing. And once you do see this break, you also get another confirmation here. But you can actually see you touch that overbought area as soon as your harmonic completed too. So if you see it in overbought and your harmonic's completing, it's a better sign. If it's a bullish one and you see it in oversold and your harmonic's completing for a bullish harmonic, that's when you know that it'll line up. And it also helps if you're just no typical support and resistance where supply and demand is, because if you're going to go ahead and bring this all the way over and you're looking at your daily here, you can actually see this is a supply area. That's an area that you can see it getting rejected from. Let me see if, like, even if you go to your 3-day here on the larger time frames, you can actually see this is a supply area. So this is an area that people would be looking to take profits on if they got back in from down here. So you want to line up your supply and demand with that as well. Let me see if I can go to STG and see how that lined up for you with the bullish one. So if you have your bullish harmonic structure here, your 886 is here, this is where you're looking to take your trade. You have your 886 marked and you drag it throughout your entire chart and just see how it looks. You eyeball it. Like, okay, how does this look? Well, we bottomed here with the candles, top of the candles here, so that's a pretty good area. But we have had a couple wicks below, so you might think, okay, hey, we might be able to wick down into this zone, right? Just drag this off, but this is where you're looking for your reversal. You're looking for your reversal down here. You take these wicks, you include it in here. You're looking for your reversal right here around this 886 at your D point. And sure enough, you want to keep your stop loss below your X over here. And that's what we did. We came down here, we filled this gap over here. We came and tested these lows, but ultimately we came back up and we retested this area and we went. But my number one piece of advice when you're starting off with a bat pattern is you want to keep these cheat sheets, and they're posted in the cheat sheet section of the Discord, and you want to check all of the ratios to make sure these ratios line up. And just to understand where these ratios come from, Let me hop over to Bitcoin for this real quick, just to show you a good example of a Gartley pattern that played out. I know we're going over the bat, but this is a very clean Gartley pattern that played out in the past with some very easy levels to look at. So let's pull up that bearish Gartley pattern here for you. And let me, where are we at? Here we are. So I know it's a little blurry, but it'll work, okay? So your bearish Gartley pattern over here. We'll cover that on the next video, but for now, I just want to show you how these ratios are formed. So just starting like you would the bat pattern, you go from high, swing high over here, this is the highest point on this area, to swing low. And then you go up to your B point. So your B point here, it should be in the middle, right? But since this is a more macro, sometimes you can use the bodies of the candles and it be fine. But typically you always want to use your wicks. And then you come all the way down. So it's going to be in between that 382, 886 plus or minus 3%. It's not lower than your A. And then you go up to your 786 here. So say this is your 618. And this will be on your cheat sheet. You can always look at this on your cheat sheet. You have your 618. You have an 886. And then this is your 786. This is where you would have taken your short on Bitcoin at your D point. And you can see what happened after the Gartley pattern. It just completely nuked. Without even a type 1 or type 2, it just went completely down. So, how do you get these ratios? Where do they come from? So, let's do the bearish one first, and then I'll flip it and we'll do a bullish one for you. When you take from your X to your A, this point right here, your X to B ratio that you see, your 618, when you fib that over from high to low, from X to A, this is your 100% move. So this is a 100% move. Think of this as just like 100%, your whole piece of your pie. This move up to B is 61.8%. 618. It's a 61.8% move of this 100% move up. So what would you do to find this other area up here? You'd take your 100 minus your 61.8%, and then whatever that is, that's going to be that move over there, your 382. So that's how you get that leg. That's where that comes from. That's the percent move up of your X to A. So your X to A is 100%. Your B leg here, where you get the 618, that was a 61.8% move of this up. And then also, you can leave the fib here to start from X to A here, 100% move. This D point, your 786, let me delete this. That's going to be your 78.6% move up from this 100% move here. So 78.6.786. All right. Now, when you're looking at these legs, how do you get these? So to get this leg down on your C, you actually have to take your fib tool and start it here at A, drag it up to your B. This is now your 100% move. So this is what you're looking at for your 100% move now. And then this move down from B to C, your 886, 886, 88.6% of this 100% was your retracement down. Sometimes it helps to know where these ratios come from, right? And then to find this leg right here, your B to D, you actually have to take from, hold on, let me get rid of that. You actually have to fib from your B down to your C to find this D ratio up here. So we're just going to say this is a 1272, just is very close, right? It's within that plus or minus 3% or so. So 100%, this is your 100% move down. You actually had a move up that was 127 or 130%, and you can actually see this over here on the right. And if you need to make it easier to think in percentages instead of Fibonacci ratios, you can always change this to percents. I use the ratios just because that's how I learned. It's easier, but you can actually see 130% move up, 127% is your 1272 right here. So yeah, it went a little bit higher, but that's how you find this over here. So think of them as percent moves. Those are your Fibonacci ratios. 0.5 is 50%. Pretty simple. So if you go up and down and you only retraced 50% of that move, you'd be looking for a bat pattern. All right, so I'm gonna go ahead and open it to any questions for anybody that's been listening in the Discord. I'm gonna pull up the VC chat real quick and cover those. But if you guys have any other questions about the bat harmonics, feel free to go on YouTube and search some of Scott Carney's introductions to them as well. They're really great to make sure when you do find your harmonic structures. We'll just use this Gartley one that we had for an example, that when they do line up, you're also using just typical supply and demand to find, okay, is it lining up at a resistance point? Like, is this a supply zone where somebody would want to get out of a trade? And when you really zoom in, you can actually see some of the resistances you found, and that was actually when you had topped and you find your reversal point in the markets. But if you guys have any questions or anything on it, please let me know. These can work on any time frames, any asset. And they just have to make sure that you're fitting inside the ratios on your cheat sheet. So go ahead and save the cheat sheet. You can find them if you just Google them if you need to. If you can go to harmonictrader.com, and there's each pattern that is on there as well. But just make sure they're inside the ratios. As soon as it hits the D point, doesn't mean you have to enter at the D point. You want to watch price and make sure it doesn't just fly through it. You want to see that you're finding some divergence there. You're in a supply or in a demand zone, depending on if you have a bullish or bearish pattern. And then make sure that you know, like on that first initial reaction, it can go a little bit deeper, but you do want to bid as close as you can to that X if it is going a little deeper, while you keep your stop loss below it for your bat pattern. But that's it, guys. Thanks for watching this one, and if you have any questions, like I said, please let me know.